Yo, what's good, everybody? Hope everybody's doing well. Today is May 31st, 2023, and we are coming to a close of this month. But that means a new month is coming swiftly, and so it's definitely time to definitely talk a little bit more about how we can continue this journey. You know me, I'm all about the journey. And so everybody here, I really appreciate you joining this journey. I know you're on your own journey as well as becoming or trying to excel at being a investor or an investor. So the point of this channel has always been to try to put tools in your toolbox to help you get to where you're going. So with that being said, appreciate everybody that has kind of jumped into the chat early. Early bird gets the worm. We got Hot Rollins. Been a minute, man. Hope everything's going well. Nice to see you in the chat for sure. We got Wade. My God. Hey, the old faithfuls. And that's what it's all about. Consistency is so important, man. With anything, it doesn't matter if it's investing, just in general with your life. The people around you, they want to see a consistent person. So the question I'm always asking myself is how can I continue to be consistent, right? In everything. But yeah, so today we have a really good topic. I actually jotted a few notes down here to prepare to present to you guys because there's a lot of this stuff going on. If you want to look at the post chain ecosystem, Hexaco, look at everything involving things of that nature within those coins, right? Whether you're talking about the Ink token, PLS, PLSX, Hex, EHEX, all these different things, and you look at the whole ecosystem and you see everybody basically talking nonsense. Some people trying to speak truth, some people getting their voice out and saying, hey, this is what's going to happen. This is what needs to happen. Other people telling other people to calm down, all the emotional riffraff. And one thing you got to realize that emotions will never get you paid. And that's at the end of the day, what we're trying to do as investors, delaying gratification now to have excess resource later. That's the whole point. That's my definition. But with that being said, I know at the end of the day, there's a structure to being a good investor. And the things that I'm seeing being displayed right now is just basic. It's basically people that are new to this thing, right? They're new to being an investor, therefore they're making newbie mistakes per se, right? Or young investor mistakes. I'll say that. Don't like calling people newbies. Everybody's a newbie or a young person in whatever they may be doing. And so you can be 50 years old, but a new investor. You can be 15 or 16 and be a new investor, or you can be someone that's 30 and be an experienced investor. The age doesn't have much to do with it. It's the expertise, the time spent in the research, experience. That's everything to do with it. And basically, what we're seeing is people that have been on a journey just for maybe like a year or two, and they don't quite get all the fundamentals and everything that goes around just being a general investor. They don't understand timelines. They don't understand that things don't always go to what they think it's going to be. They don't understand that what everybody says online is not truth. They don't understand some of these basic things that you would think that they would. But that's why I have this channel, because the people who pay attention here, I'm going to give us some foundational things that we can carry, even if it's not even crypto, right? Let's say you want to be an investor in real estate, let's say stock. It doesn't matter. If you have the skill set of identifying what characteristics an investor needs to have, you'll make it. And so that's the biggest thing. Swerve the FUD. Hey, chill. No FUD over here, man. I'm just trying to give, like I said, educational resources for us all to basically learn from, and hopefully you do your due diligence, always verify, double check even what I tell you, right? And then you go and make your choices, and that's what it's all about, trying to be informed and making the most informed decision. But you can't do that if you don't know where to look, and so that's all I'm trying to do here. But with that being said, anybody have a thought on anything going on within the crypto market? Bitcoin has been very lazy. It seems like price action has not been volatile at all. Ethereum's tagging along. But yeah, Pulse is dropping. But this also, sir, whenever there is, just like there's a coin, you probably heard this term. There's always two sides to a coin. This is probably the most true statement when you just talk about a physical coin. There's a heads, there's a tails. There's someone that's going to get ahead, and there's someone that is going to get the tail end of almost everything. That's just the fact of the matter. The question is, what side are you going to be on majority of the time. And do you know how to assess what side you're on? But like I said, you can't assess if you don't have the right data or the right information to look at. And if you're just going based upon what you feel or what you may think is right. But that's the key, right? Being able to put all these things in a framework. So today in this stream, we're gonna start nice and structured, right? Pretty easy. We're gonna talk about like 10 to 15 common mistakes that new investors make. And then we'll briefly talk about some things that can help your structure. Like with this being said, crypto is all on you. And at the end of the day, you can't blame anybody else for anything that you do. You can try to get informed, but with anybody saying, like I said, even myself, look at it and say, "Hey, does that fit with what I'm trying to do for myself?" And if you don't know what you're trying to do for yourself, then that's when it comes down to like, hey, sitting down and say, hey, well, what's the best way, in my opinion, to go towards where I'm trying to go within crypto, which is obviously to increase your wealth. And so there's general wealth strategies outside of crypto that I just don't think people know about. And it has nothing to do with how much money you have, or it's just it's general principles. And I'm gonna share those things in that framework with you guys that has from an informational standpoint, it's changed the way that I think and speak in terms of looking at money. And that's the key thing that everyone that has to change, especially if they're new, you got to change your relationship with money. Then you can, okay, start to grasp, okay, how does investing even work? But with that being said, we'll go through it all. What we got here? Let's see. I see the current dip in PLS as par for the course. Okay, so part of the course. Get the paper hands out. Those willing to hold past that 3 to 5x will win in the long term. Yes. Keywords at the end, long term. And you can associate that with winning. So that's probably one little tidbit that I'll give you before I show you guys the slide deck that I have. Long term, you can basically, okay, you have a scale. Imagine you got a scale, right? Short term is on one side, long term is on the other side. Basically, the chances of winning get amplified the longer the term that you choose. See, that's the key. You choose the term, just like getting a loan, for example. They say, hey, you want a 1-year loan, a 5-year loan, a 7-year loan. You know what I'm saying? You can choose that term. But generally, the longer the term, when it comes to investing specifically, the longer the term that you choose, the higher the probability that you have to win. And that is in any type of investing, not just crypto. So there's your one in the first foundational wealth mindset strategy when it comes to thinking about, okay, how do I go about crypto? Just that alone can save you from making the mistakes that we see a lot of people making today. And so, yeah, that's key, man. So let's get into some stuff. I want to show you guys. I'll pit stop at PulseX, right? I would just like checking in, looking, seeing where things are at. That way we can have a good idea of, what's going on. And so let's just stop at PulseX. I think one of the key things to determine is ask yourself, number one. So my dollar, right? Let's say you have a paycheck and you're able to trim some off, right? You got $1, you got 10, you got 100, you got 1,000, whatever. What can I get for this dollar? And the thing that I get for the dollar, can it create potentially more dollars for me later? And how many of those things can I get for $1? Keep it simple. If you start there and you start to look at all your options, it's very little things you can get thousands of for $1 that has not only the potential, but has the mechanics of being able to give you more dollars in the future. So we're going to take down this data point. $1 gets you 8,230. What is that? 222 posts? There we go. So 8,222 posts for $1. Okay. Interesting ratio there. Let's take a look at PulseX. Man, look at that. $1 gets you 20,755 PulseX. So sit there, let that sink in, and then go out in the world. Go out and look at other assets. Go out and even look at other crypto. because I personally believe is, hey, you have to look at everything and then make your decision, right? Having knowledge base of options is very key to understanding what are the possibilities depending on what you have. But we'll stick here with the basic, right? Topic of conversation, post chain. But you get $1 gets you 20,000 plus post X currently. And you have to make an educated decision is, hey, if I buy now, then what is the probability of that 20,000 PLSX getting me more than $1 in the future? And there's a scale to assess that risk and reward, which, hey, that comes with understanding certain things. If you don't know how to do it, hey, you might have to seek it out. Maybe someone else does know how to do it. You might have to see what they know and try to add to your toolkit. But anyways, let's go over to the slide deck real quick. And so I'm gonna go with the general stuff, man. So this is, look at that. Look, I went through and made an amazing. Hopefully, y'all appreciate the thumbnails I'm trying to put together. Easy, nice, and I guess you can say straightforward. But I'm not holding any punches here because at the end of the day, people just gonna have to learn, man. This is the scenario that is going through a lot of people's head when they're in the first 1 or 2 or sometimes even 3 years of being an investor. Um, for me on my journey, I'm basically coming in on a decade, but this is not only within crypto. This is just experience in other sectors, experience in other types of investing, right? And then so a lot of these things are common. But this is what happens in the first year or two. But then think about it. Go back in your memory bank. The first year or two of you trying to do anything new was sporadic, wasn't it? Right? So crypto sometimes may be the same. Now the question is, how are you going to handle it from here? So with that being said, you can fix it. You can fix it. New investor syndrome. It is a syndrome. I personally believe it because everybody goes through it. And then so you have to be able to have the forefront effort to basically say, hey, how do I get rid of these maybe questions slash mistakes slash immaturity that I have in the space, and then create a new mature framework for myself to then now proceed in a better way. That's just the key. And so just a few slides, not many, but the question you must ask first, why? Why should I even invest? Why can't I just go to work, save money, and just chill? Go, buy a pair of shoes, go to the movies, go and just spend the money, buy a car, buy a watch, do all these things and just work. And whatever I just make from my job, then that's all I got to work with, right? In the now. But why invest? So these are questions that you need to ask. I think the first thing that comes to mind is when you're asking your why is, do you know? So first thing you need to understand is the opposing forces that are going against you from day one. The first day that you become like independent from your parents, the day that you're like, oh snap, it's on me. I have to go work and I have to get a roof over my head, XYZ. Whenever you have to start paying bills, whenever you become a financial, I guess you can say independent from anyone else. Now you have to start asking different questions because there's things that are going against you and you have no clue coming from childhood, right? Because generally everything else is just taken care of for you. But now it's up to you. So what are those opposing forces? We talk about it all the time on the channel. Inflation is the number one opposing force for anybody who is dealing in dollar terms or any fiat currency term. So that is one of the biggest things you may want to try to wrap your head around first and say, hey, this dollar is not going to get me as much in the future. So I maybe want to trade this dollar for something else. And the thing is, it's going to be harder for you to invest if you lose sight of that precept there. It's going to be hard because you're not going to be able to see that you're losing value every day. And then so doing nothing, in some ways it's good, but in some ways can be bad. And then so you need to be able to hedge for multiple scenarios, right? Just for example, don't invest all your dollars, right? Because you wouldn't be able to eat, you wouldn't be able to pay rent, but you need to maybe think about investing a portion. And there's a framework for that. But then ask, what is your why, right? These are things that I constantly ask, people that I talk with, people that are coming to the space, people that want to, be a better investor. When I'm doing consultations, which by the way, you guys, consultations are back open. I've been able to free up some time for these things. And so in the description of this video, if you guys want to get in contact with me, you can do that. Swerve the Dip on Telegram, and we can talk from there. But with that being said, when I'm talking to people, I ask them, like, why do you even want to do something different, right? Because you need to see how serious it is for you. Because some people are like, yeah, it'd be cool to maybe make a little, a little side money. Okay, well, is this side money or is this your lineage? Is this your financial future, right? Because those are different things. Like, how do you treat money? How are you seeing this process at the beginning, right? Why do you want to do it? And what I come to find is like, yeah, most people don't really want to do it. They just feel like, yeah, well, I heard, maybe let me just test it. And then they take testing type actions and they never actually blossom. Is because from the get-go, they're not taking it serious. Which is going to be a key point we're going to talk about here in a second. But what's your why? Another thing to ask yourself, do you find that your financial life is getting harder or not getting easier, right? Through time, you would like to think that, all these things that we do for ourselves, for our families, for other people, it should, we should have something to show for it at some point, outside of just time spent. All the work, all the saving, all the whatever you may be doing is just like, hey, it would be nice to be able to maybe enjoy the fruits of my labor in one or two different ways. Maybe be able to say, hey, I don't want to trade my time as much, right? These are things that you have to decide. Or you can say, hey, I just want to just work until maybe I can't work anymore. Hey, that's fine too. It's really all up to you. But if you ever had that inkling of saying, you know what, I think at some point I would like to spend more time with my family, or I would like to be able to afford that trip to go X, Y, and Z. I would like to be able to, I would blank, 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 fill in the blank, write it down, visualize it. That's going to give you the passion that you need to take this stuff serious. Because it's necessary, truthfully, right? Because every dollar, no one wants to waste any, especially in an investment, and no one wants to lose anything in an investment. And so, these are things that we have to ask, how do we facilitate those things? Another thing to ask, like when you're investing and why to invest, do you know what options are out here? There's traditional finance. Yeah. We briefly talked about some of that stuff. There's crypto, but I don't even know if people in crypto even know the luxury that they have, and actually creating real expectations with process. Do you know that the other options, one, take 10 times as long, 5 times as long to get the outcome that may be, life changing or something that may be pleasing to you? Did you know that? Okay, well, what are those options? And do your compare and contrast. I think people are losing sight of that, or because they've never done the research to know anything else. They may be crypto native and only come to crypto first, which is cool. But like, you got to understand, like, other stuff out here, you might get 12, 15% in a year and be like, oh yeah, I had a banging year. Or after a decade, you might be up like 2x, 3x and be like, dang, I had a banging decade on that real estate play, or that, whatever, that stock play. Elongated play, by the way, 10 years. And we are sitting here with opportunities like that can come in a week. But we have to understand there's extra volatility to get towards that opportunity. And there's a strike price that you need to be doing stuff in. Basically, when things are undervalued, hey, do you know how to assess that? If not, keep watching the channel. But yeah, so these are all things that you need to think about. And that's a big thing here. So next, let's go through. There's a lot here. Now, this is just 15. I could probably think about an additional 15 to 20 things that young investors do that are just general mistakes. But it's fine because we all make mistakes. But the question is, are you going to keep making mistakes? And if you find yourself somewhere on this list, hey, it's good. Don't worry about it. Because guess what? There's always a way. and there's always a process to course correct, right? And this is in no particular order at all. I'm just basically giving the generals when it comes to thinking and acting and doing as a young investor does. So, number one, because I'm just seeing this all the time, and I was like, you know what? I was there before too. But one thing that you want to start to do less of, it's okay to do, but is this something that is a common repeat thing for you, like weekly, or maybe like once a month, twice a month? Like, hey, basically, number one, asking when something will happen. And basically fiending, like you're fiending. This isn't like, I just have a general question. You're like fiending to know, oh, I must know. For time estimates from other people. So not being able to put your qualitative assessment on something, you're like, someone please tell me, when am I gonna get blank? The thing is, no one can tell you that. Nobody. Especially the shorter the time frame, it's even harder. So the best thing is just ask less, research more. That's the key. So we'll move past that. Number two, looking at everything in dollar terms instead of percentages. So this is something that I had to battle, especially when I first got started in real estate. I'm like, okay, well, if I put in X amount, I'd like to make X on this flip, for example. Well, that's not how things work, right? Like you can go for that, but you're gonna give yourself these how do you say, these unrealistic expectations when you should go off of things that are sound and general percentages, right? And so, for example, let's say you are doing a buy and hold. Like it's like in general, right? Just from years and years of data in general, depending on how much you put down, but it's nice. It's a good thing if you're able to get, hey, 8% cash on cash return, you know? Okay, so 8% on this dollar amount instead of 20,000 on this, or 200,000 on X dollar amount that I put in, whatever, right? So dealing in percentages is very helpful because it's going to keep you sober. It's going to keep you not making these landmarks for dollars that get you in trouble. Like saying, hey, I want to have $1 million in my bank account is probably one of the most dangerous things that you can think about. Reason being is because it's just like, hey, you're not going to see all the things that could stop you from getting to that $1 million. And also, you're not going to see the things that can prepare you a little bit better. And you're just like, oh, I'm so close to $1 million. Let's say you're at 800 and whatever. And there's something that you're just going to keep doing, not realizing like, I need to course correct, maybe do some more asset protection, right? And then readjust, maybe diversify, and then get to the million versus like, oh, I have to have the million all right now because I'm on my momentum swing, right? These are all things that you've got to learn how to adjust and to assess while they're happening. So the sooner you're thinking about it, the better. But I think something that's helpful that I actually helped a good one of my, I guess you can say, one of my young proteges, I basically helped him understand. I'm like, hey, one thing that you should maybe think about is not making X amount of money per year, but ask yourself, hey, did my net worth increase this year? And by what percentage did it increase? So do all the nuts and bolts, because yeah, you can make more. I told him, you can make more money. Yeah, sure. But a lot of times when you make more money when you're young, you'd like to start to spend more money too. Oh, okay, cool. I got a 10% bonus at my job, or I make an extra, $1,000 a month. Okay, cool. Let me upgrade my car now. New car right away. Or let me upgrade my wardrobe right away. Not my savings, not my investing, not my retirement, not anything. It's just like, hey, I'm going to update and basically buy the stuff that's going to be seen on the exterior first, when it should be opposite. And so, these are things that young people or just young investors make, as far as, hey, when they have money in their hands, it's more so the thought process of spending it instead of growing it, because you can basically spend out of your growth, right? Let's say you grow something for a year or two. Give yourself some time delay before you start making these decisions that actually set the rest of the course for your habits. And what we find is when people become adults, as they're 30, 40, and 50, they just have bad habits. That's all. And it's not a thing that they can't change, basically. But basically, yes, think of things in percentages. Hey, am I increasing my net worth? Am I increasing my percentage in what I own? Right? Am I increasing this? Not, hey, do I have X dollars? Just something to think about. Number three, I think this one's pretty. I mean, this is gonna yield to the hey, I want it now type thinking. Doing too much back and forth, basically trading. Hey, short time frames. I'm trying to double up, triple up this. Bada bing, bada boom. I gotta feel like I'm doing something. Gotta post it on the internet. Hey, I gotta show people I got this course. Hey, especially when you're young into something, you're doing too much, right? When you're at the beginning stages of whatever it is, be observant. Take some action. Don't be in a rush to make whatever goal that you have happen, right? Because one general rule, like we're going to get to this stuff, like these time durations typically are not less than a year. Like 98, 99% of the time durations for, good solid investments are years, plural, right? And that's actually going to lead into another point. And then so trading and doing too much, that's, as we can see, that's what's going to, if you don't have that experience, but then if you're saying, hey, I'm going to be a professional trader, then I would ask you to ask someone else who's trading and say, hey, how long have you been doing this? Hey, show me, your progress. Show me the things that didn't go well. And if they don't want to do that, then that lets you know they're not really that wealthy. Because wealthy people will be like, you know what? My first venture, it didn't work out, right? This is what happened. Boom, boom, boom. But my second venture, dum, 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 this is what happened, and this is how I fixed it. That happens all the time. I talk to people who have businesses. And this is something common when they finally get that thing that worked out for them. It's generally not they're truthful about it. It's like, yeah, I messed this up and I messed that up. So a person that doesn't admit when they had, mess ups or whatever the case is not gonna be the best person to listen to. Truthfully, they're showing you a half baked chicken, you know. But anyways, the next one. So not understanding key terms, I think, is a big mistake that people make. So key term, for example, as an investor, do you know what return on investment is? Right? Key term, do you know what hodling really means? For example, key term, do you know what percentage rate, APR, right? APY, the difference between the two. Real quick, one amazing link that I can go to, right? One amazing link that I can go to when I was in college, when I was 18, 19 years old. And internet was still kind of, going on. I'm trying to figure some basic things out, but at the learning, like they had this area for athletes that they allowed us to kind of get access to some computers and stuff like that, do homework. So while others were doing some homework, now mind you, I did my homework too, but I was on investopedia.com. Like, okay, snap, what are these terms that they're using? What? Investing? Oh, what? There's stocks? Oh, there's bonds? What are those? Fixed income, mutual funds, ETFs, options, 401k, Roth IRA, markets. Oh, what is a market? All this stuff. Oh, there's different parts of the economy. What? Oh, there's different parts to personal finance. Oh, okay. I heard about retirement. Oh, but I can budget. All of these just basic things. Can you attach a definition to them? And if you can't, that means, hey, you probably should click on some links, right? And then so this is not to chastise anyone, but this is just saying, hey, broaden your knowledge base, because anytime you can broaden your knowledge base, it's going to allow you to take a more quality look at whatever you're looking at, the more that you know about, and then so these are all things. And so what I would consider is investing for beginners. Now there's going to be some things, it's paid. No, don't pay for this, right? You can find 95% of what you need for free if you know where to look. But come over here and click on some links, right? Now, do not get sucked into being like, oh, I have to do exactly what they're doing, but just learn general context to then start to build your framework. That's key, And so use that as a resource. All righty, let's keep it going. So, But basically, what happens, because it's like, hey, you don't want to understand key terms as an investor. That's basically due because you're not taking it serious enough. And that's the fact of the matter. What I find is, just in general, when it comes to just doing things that may be helpful for themselves, most people don't take themselves serious, or whatever they're doing serious. Truthfully, I'd put that more than 50%. Most people are just kind of, well, yeah, sure, hopefully, man, yeah, 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 it would be nice. Like, no, it's like, hey, you want to come here, you want good for your life, you have to take it serious. Like, there's no way around it. If you want success, you have to take it serious. So let's continue. This one is the one that gets most people. Number 5. Time horizon is way too short, i.e., like 1 month to 2 years. Nah, look, it's just, hey, like I say, if you were to look at other options and see, well, how long do things generally take over there, right? You'd see that 1 month is not it. Even 2 years sometimes over there in traditional finance ain't it. It's more like 5 years, 10 years. So just match that up. It doesn't matter what asset. Crypto, yes, it is more volatile, and it could happen very quickly. Things could happen in 1 month, but the likelihood, you have to ask yourself that question: what is the probability of me getting to whatever the financial goal is in a month? It doesn't matter what it is, it's low, right? And so you have to just know that as a broad-based case. And then, so what I encourage people to do is say, hey, whatever your investment goal is, take it year by year, assess year by year, but have like that end goal, like the big one that you're talking about, 4, 5, 6 years, 10 years out, right? 4 being the minimum. Because if you've looked and done some research, hey, typical cycle, right? Typical business and money flow cycle, 3.5, 4 years. And so that's something to learn and something to keep on your mind. And then, so number 6, not assessing risk or reward, right? I think the biggest part is people are very outlandish with the reward, because you know what? I'm going to talk about that for a second. Crypto is the land of 100,000 X's, but is it truthfully a land of constant 10,000 X's? And if it's a 10,000 X on what amount of money? I think a lot of people are like, hey, if I put my $10,000 in, I can get a 10,000 X in a cycle. Okay, well, is that the base case, or is that realistic? I think one thing that I did maybe about like a year ago, as Hex was kind of going into its bear market. Let me see if I can find it. One sec. Let's see. Uniswap. Vision. Let's see. Let's see if we got some Hex action. Okay. So, understanding the history of what's going on here. So the history of what Hex has done, the claim to fame, 10,000x. And so people in their head automatically for post-chain and post-X, 10,000x. As long as they're here from the beginning, 10,000x. But you have to ask yourself, how many people who have participated in the Hex ecosystem has actually gotten 1,000x or better? And it's a low percentage of those people, right? If there's, how many stakers? 150,000 stakers, but even 300,000 holders, give or take. What is the percentage of those people that actually were a part of 1,000x plus? And what you'll find is it's less than 8%. And so 92% are more, because the thing is, we got to understand, these things are exponential. And then, so that means the outcomes can be wildly different. So, for example, a person who, let's say Hex came out and you got on the bandwagon before this big pump. So let's say, all right, you're a part of that 8%, all right, cool. The best that you can do is, let's see, the best that you can do. This is like the absolute best thus far, within that time frame. Now, this is something that is continuing, and as days go by, we'll see different candles being printed on this chart. So we're not talking about, future expectation. We are just talking about what has happened. And people take the narrative of saying, okay, well, hey, this is going to also be copy pasta. But the best that this person could, because look at this. This is from December to April of 2020. So let's say 4 months. If you just missed the first 4 months, The best that you can do is 900x. And that's if you sell the exact top, which 0.001% of people actually do. So let's be more realistic. Let's say we kind of come down a bit and, you see the top come in and go. This is where most people find themselves, right? Most people find themselves like on this back end trying to like, okay, let me go ahead and capture those gains versus trying to just, maybe start to assess risk and see, okay, where we at? Or they don't know how to do those things, right? And then so let's kind of get something a little bit more realistic, which happens to most people if they did want to sell at a higher price point of where they bought. And then so what that does, let's put it somewhere right here. So what that does, that drastically changes your outcome from 900x to 400x. Now, no one is complaining about 400x, right? Nobody, right? And so, but this is still very, very early. There may be 2,000 people, 5,000. No, I'm sorry. So there's 5,000 people here. There may be 10,000 people, here who even had that opportunity. 10,000 out of what? Like we talked about, 300,000. So run the percentage, and so, okay. Now let's just say the general population where most people are at. So general population, when it comes to hex, for example, is somewhere in this area here. So the general population of the earlier people, not the earliest adopters, but the first batch of people who understood, hey, I can hold this thing, XYZ, are somewhere in here. So let's just take an average price there. So let's take an average price and see, what that looks like from there. What am I looking for? Okay, one sec. All right, so we're gonna take this average price, so somewhere in this middle portion, and and let's say we sell the exact top. Now that still drastically changes things. 84x. Okay, still very, very, very good within that time frame. You're looking at like a year and some change. Yeah, sure. But same thing. Let's say you don't get that exact top. And so the biggest thing is say we're assessing the general outcomes, right? Let's say you don't get that exact top, and then you're kind of figuring out on the way back down where that's what happens to most people, especially people that are newer. And so that's gonna boom. Okay, about 40x. Okay. So the general population cashed in potentially, let's say, with the first cycle, generally maybe like 40 to 80x, generally, right? Use generals, not the over expansive, the best of the best type of what could happen, and not the exact worst. Use the general as your base case. So even for hex, something that's been super exponential and really great for a lot of people, 40x is still nice. That's what you need to kind of think about, right? And so, just extracting the data with a good sober eye is always helpful. And then so we don't know, right? That may come back again where the general is like, okay, cool, maybe like 20 to 50x, right? But if you're paying attention to this thing, on this next uptrend, we'll see. Maybe you are part of the few people that can get that 100x. But are you willing to take the risk of buying this at less than 2 cents? Do you have the conviction? Do you know what this is meant to do? And if you are, then yeah, you'll be a part of that 8% that can get that 100x, 400x, 1000x, 10%. So yeah. So anyways, let's go back to it. Or should we take a break? Hold on, let's take a break. I gotta check with y'all. What y'all think so far? Because we just getting into it. Let's see what y'all got. Sick thumbnail. Hey, appreciate it. I appreciate that. I put a lot of effort into it, trying to make sure this stuff is easy to digest. All right, let's see what else we got. Okay, so we got some more stuff. Let's see. Reminding myself that the core fundamentals haven't changed much, just emotions are high. Yeah. Yep. And I mean that's the general response for most people, is to respond emotionally, which is something that we'll talk about in the framework into being a better assessor. I guess you can say. I'm not going to say necessarily being a better investor, but being a better assessor of your options and what to do with said options. And so, yeah, cool. What else we got? Realizing that just saving up from my salary till I retire wasn't going to be enough. was a tough pill to swallow, you know, and that's something that a lot of people actually don't realize until it's almost dang near too late, till they're like 40 or 50 and they're about to retire. You know what I'm saying? So if you can catch this stuff, even in your early 40s with crypto, it's possible. Give yourself 8 years, you know, you can get it done before you're 50. You know, but you got to be diligent and you can't waste anything, right? Especially time. But yeah, man, everybody's got to swallow that pill and see what are their options. Cool, great info. Appreciate it, Wade. You know, I'm just gonna continue to just see if I can add this quality stuff to you guys' toolbox, as I mentioned before. And so yeah, one thing I would encourage you guys to do, go in the description and check out some of the things I have in the description. I had the last video where we had 4 hours, like all these little things I'm talking about. Hey, how to assess this, how to assess that. If you feel like you're not necessarily there quite yet, it's all good. Go check that stream and it'll show you how to assess a lot of these general things. And yeah, 4 hour stream just for you guys, right? And oh yeah, and just back to last stream, yeah, there's gonna be a little tidbit, I think like 10 to 15 minutes. My Wi-Fi was out, something was going on in the neighborhood, whatever the case is. But that's, you know what, somebody told me, hey, you gotta stop doing everything for free. And I was like, nah, man, I'm good. Look, I'm good. But they're like, yeah, but people will not value what you're doing unless there's something that they can at least donate, right? So there's something in the at the bottom of the description. If you do appreciate any of this information that y'all are getting, you can donate to that ETH donation address. I believe it accepts Pulse, PulseX, Ethereum, Phantom, whatever. But hey, if you feel that you want to go that direction, it would be greatly appreciated. Who knows? I might be able to get me some upgraded Wi-Fi. Anyways, let's see here. So can you go over sunk cost fallacy in crypto? Oh man. You know what? Or is it the same everywhere? I got you. Yeah. Okay. Well, I would say like the biggest thing when it comes to that, um, because people have a hard time realizing like, what I was doing before ain't the best thing or action. I would just say yes, it happens in crypto. It happens in anything. The biggest thing is when you're realizing like, okay, like the way that I'm going about this is not yielding me it's not yielding me something that seems to be like it's working. And you can understand if something is working or not. Um, you've got to look at some other options and see where you might want to mitigate some of the risks that you currently have. Because generally it's just due to people going in too heavy on whatever it is, you know. And then so having pace but not being greedy, that's part of the savvy investor framework that you know we'll be mentioning later. Um, and so generally people are greedy when they just go balls to the wall early before they even know anything. You know, yeah, they're gonna find themselves in some heavy issues and they're gonna be like, nah, this is it, this is it when it's clearly wrong, you know. And so, you know, we just gotta be cautious and be vigilant of those things. All right. So it seems like we're going at a good clip. You know, we probably got maybe another 25 to 30 minutes of the stream. So let's continue. So now, as we look at some other things here, let me pull up the slideshow. Um, you know, I would say another thing. Where are we at? Are we number 7, right? I think so. So mistakes that people make, especially in investors, basically not even knowing the basics of what you're buying. So you don't even know the basics, right? This is something to really consider because just for example, let's say, you know, hopefully we've all played a sport here and there, maybe not organized, but maybe just in the neighborhood. Let's say, you know, you see some of the older kids, right? Older kids playing sports. And then you're just like, that would be cool. I would like to join. But let's say you never really watched, you know, you just kind of just jumped in there. What do you think is going to happen? Like they're talking, you know, let's say it's a game of basketball. Someone's like, hey, set the pick, roll. Hey, I'm on the post. I'm on the post, right? And you're in that game as a young person in there, right? You've never done any of these things. What do you think is going to happen to you? They're going to take advantage of you. They're going to do things that you can't just because it's your experience and age, right? And you know, they've been there. They've done it. They know what to do. They've talked about it. They've practiced, right? So the same thing applies to investing. You know, if you don't know the basics, And when it comes to investing, right, we're talking about trading the dollar for something else. Then what do you think is going to happen? This is the sad truth for a lot of people early on, is they just don't know any of the basics. So like I said, go to investopedia.com. There's a lot of resources. I think Coinbase has like a, hey, what is crypto basics resource? Utilize that. Or for example, consult with somebody that knows how this thing works and go from there. And so, yeah, get to know the basics, but that's what a lot of people don't do, which is going to kind of hit them upside the head at some point. Now, number 8, I think this one is very key, is because, this is something I had to do. And I spent months to be like, okay, I feel like I got the base case for the history. But basically not taking the time to do the history lesson or research. So before you start looking at, okay, like what is my investment doing? And I'm kind of, researching on, what I want. What's the history lesson of, I guess you can say, the type of investment that you're trying to do. So let's say crypto, for example. Have you done the history lesson for Bitcoin? Right? I think that's something to think about, right? Which you can do pretty easy. Here, Bitcoin, a peer-to-peer electronic cash system, Satoshi Nakamoto. This is the white paper. This is the genesis. This is the beginning. There's some terms that you're not going to understand, but this is what discovery looks like. Because, like, for example, how could you be that young person wanting to, play in that basketball game? You see some other people over there balling, and you want to play too, right? But you haven't dribbled a basketball yet. So this is you dribbling a basketball here, taking time, checking it out. Hey, what was the emphasis at the beginning? Now things do change, right? Just like the game of basketball has changed through time, but the general basics of it still remain. There's still a hoop, there's still a ball. And so going back to see, okay, well, where did all this stuff start from? Take your time to Google, look at the history of it, and see how have things progressed. Okay, Mount Gox, what happened there? The first exchange. Okay, then we went to all these other things happening from there. These key points are big to get you to understand, okay, now we facilitate it in this way now. How is this different? That's something to really know. It really is. Then DeFi came, all these different tidbits, right? So go through, it's 9 pages. You might understand 10% of this, but I guarantee you by reading it maybe twice or 3 times, then you'll understand 20% of it. Go ask some questions. Ask somebody that you know that might understand some of these things. Hey, I read this in the da-da-da-da-da. Do you know what this means? Okay, now you understand that. So doing the time, putting the time in to understand, hey, what is the process? And going back to the origins is a key thing. And so let's proceed. We continue. And so now that we talked about that, we're about halfway through. Basically, this is where a lot of people find themselves, not just in investing, but in life, but low emotional stability in regards to money. And so especially the decline or assumed loss of money, because people don't know, you don't really lose until you click the sell button. But any type of, I guess you can say, correlation downward for the number that you see on the screen, if you can't handle this stuff emotionally, this is something that's going to get you out of position. And that's what we see a lot of people doing, getting themselves out of position, or they over allocated to a position that they weren't ready for. And so this is something to assess. We'll go through that framework here in a second. And I'll start rattling a few of these off, right? So from there, 10, treating your investment like a gamble. So it goes back to the short-term thinking. Hey, I need this to happen. Boom, 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 in a week, in a month, da-da-da. Not a great thing. Number 11, using fractals as gospel. So for example, taking a little piece of the chart that happened, let's say Bitcoin or Ethereum back in 2019, and trying to line it up to something that looks like very, very similar to, where we are today, and say, oh, well, this is going to happen. That's the worst thing that you can do. It gives you a non-qualitative look at what's actually going on now. Every time period is different. There's general trends, but not everything is going to basically outline itself to be exact like how it was in the past. And then so you can get the generalities from it, but don't treat it as gospel. I see too many people treating it as like, oh, well, this happened at this time, this point last, 4 years ago. So now I'm gonna go heavy because this is gonna happen. There's always different optionalities of things happening. There's never just, oh, this is going to happen. There's no guarantee for anything within investing. All there is probability, and seeing, okay, where do I fall on the low risk probabilities for my investment entry. Those are things to think about. Um, and so from there, number 12, this is kind of what's going on for most of these people with crypto Twitter, but basically using social media apps as your primary information source. Um, what you got to realize is what I always try to display. I always leave the links. I show you guys the links. I, say, hey, you take the onus of going to verify and check these links. Crypto allows us to go straight to the source if you know where to look. All this stuff is on chain, right? Oh, my bad. All this stuff is on chain. You want to see what the money flow is really doing? You can. It's pretty easy, especially if you're using the DEX. You know, check Etherscan, check PulseScan. If you're looking for certain wallets, check allocations. When did they receive those coins? What is their likelihood of selling? Right? There's something that, a term that I been able to really, really appreciate doing my research through Glassnode, learning a lot of this on-chain stuff. What is the difference between a short-term holder and a long-term holder? It's that 155-day mark. Typically, after 155 days, people display different habits with what they do with their coins. So maybe find how many people. So because we're not even 155 days into Pulse, so we can't really even get that full assessment yet. And so with all this stuff saying, hey, this is going to work out. No, it's not going to work out. Those calls are way too early because on chain, we can't even see if that's actually going to start playing out long term versus short term. We need at least 156 days, to see, okay, do people start to become long-term holders? Now, what's the percentage of those people becoming long-term holders day after day after day? But yeah, you can find this stuff on chain, a lot of it. As far as information, you can see, where do people have their limit orders for Hex? Do you know where to go search? I do. Right. And if you don't, ask somebody. All right, cool. Now we continue on. So basically, number 13, being too greedy, needing 100x. And it's not realistic for 95% of people. Like we talked about that. Oh, I need this 100x. If you need something to 100x, that means you're not long enough. You don't have enough money in that asset. Because in general, just traditional wealth creation terms, right? If you can eke out a 20x from something over a span of 4 to 10 years, that is life-changing, truthfully, right? And then the thing is, if you need 100x for your life to change, that means you don't have enough money in that investment yet, truthfully. And so think about allocating more and having more realistic expectations, 10x, 20x, 50x, for crypto, you know what I'm saying? Within a time frame of 4-6 years versus, okay, I need 100x within this year because I only want to put $100 because I don't know enough. And I'm not willing to put more than $100 because I'm too lazy to do the research. This is where most people find themselves, needing 100x. Don't need 100x and you'll be okay. Doing everything on their phone. Huge mistake. One, because you can't see data at a accurate view. Like you trying to do trading view on your phone or trying to, look through Etherscan on your phone or PulseScan or trying to look at different links on your phone. One piece of advice, this is not investment advice. This is just life advice. Think about investing in an iPad, like the big screen iPad, maybe $800, $900 or a laptop. You can get a laptop for $400 or $500. These are things that are going to basically say, hey, I'm taking this more serious. I'm actually going to have something that is completely separate than my everyday usage, like my phone. And now I can basically, have this thing that I'm actually going to treat as this is where this is my home base for my investment, right? I'm doing my investing from this home base. And you're mixing your home base with your social media apps. This is why a lot of people can't have clarity because they're mixing their home base, their investment with their phone that has all these other apps that takes them out of the investor mindset. So this is something to really think about. Don't do everything on your phone. It's cool to do some things, but majority of this stuff, get in the habit of potentially doing it on a laptop or a desktop or an iPad, for example. And then number 15, I think that many young investors, they think in linear terms, which they don't realize that investing involves compounding, and these are exponents, right? And so in linear terms, you're like 1 + 1 is 2. 2 + 3, right, is 5. Well, with crypto, with network adoption, hey, things are squared, right? There's different ways to basically derive value, especially when something is small. And so compound interest is a thing. And like we talked about, year after year, keep compounding towards your net worth going higher. That's what you should be thinking about. Young investors is being like, oh, I just need a linear number, right? If I put in 1,000, I want to be a millionaire, just linear. So, right. Or if I put in my 100, right, and I want a million, I got to get my 1,000x linear, right? No, like you got to say, hey, I need to compound through time. And so, just like I said, general mistake. Okay, so let's land the plane. Now these are some things. This is not financial advice. This is just educational resource that you may or may want to add to your toolkit. But how to build your investment framework. So this is not telling you what to invest in. It's not telling you how to invest. This is telling you structure, things to think about. And then so the first thing I would say is start with the way you think, right? What is your thinking pattern in regards to growing your investment? Do you, like I said, do you have to have it happen in a certain amount of time? Because what you'll realize is as inflation keeps happening, as they continue to print more money, that means your investment needs to be what? Guess what? Continual. So most likely for the rest of your life, truthfully, now things change as, more money is made. Then you have to start thinking about, okay, well, how do I manage and protect this capital? Maybe thinking about doing a trust, maybe about thinking like there's a lot of things that, I could get into that, even I have to do now. But those are for down the road once you have a firm framework. But yeah, so what's your relationship to it? Try to create a positive, non-greedy, patient relationship with money. Now from there, the question that you need to ask yourself, and something that I would highly encourage you guys to do, is go get a plant or buy like a small tree and cultivate it, like in the physical. For example, you can go to Home Depot, you can go to Walmart, wherever, nursery, go buy a little tree. And what you'll find is there's a certain way that you need to go about to grow that tree, because investing is the exact same. For example, if you leave it in the sun for too long, okay, without doing anything, that may be harmful. If you don't water it. So what is watering and investing? DCAing. Oh, if it's a little bit more thirsty, I need to maybe give it a little bit more water. Okay, if prices are a little bit lower for the tree that I know is going to be alive if I take care of it, let me give it a little bit of extra money, right? These are just, that's just a parable for you. And so this is how you start to get the habits, because this is all about habits. Can you build the framework to have good investing habits? So go get a tree and start trying to take care of it. And what you'll find is you'll probably start to become a better investor, truthfully, right? A lot of people are investing and they've never been taking care of anything, truthfully. So how are you going to take care of money if you're not even taking care of yourself half the time? Anyways, now, I would also say this: before you get to the investing framework, think about maybe creating a savings framework, right? So look at your liabilities on a monthly recurring basis and say, hey, do I at least have 3 to 6 months of just general money that I've saved in case I lose, my income for a little bit of time, or I have hardship, or, whatever the case may be. Maybe you're a woman, you may get pregnant for whatever period of time. Hey, do you have this backstop? Because the first framework that you got to think about is, hey, know where you're going. Okay, cool. What are the vehicles? And then cool, where are my backstops? Where's my protection? Imagine you're a quarterback in the National Football League. Okay, cool. You might have the arm to throw it 80 yards down the field. Great. You might have a receiver that can run down and catch it. But if you don't have the backstop of the O-line and a center that could point out, hey, here's the mic, here's the left, here's the left end, here's the middle linebacker rotating. Hey, here's an option that we may need to consider before we go, right? If you don't have these other pieces, guess what? You might get sacked. And so there's a football term basically saying, hey, have a backstop. Savings is a decent backstop, 3 to 6 months. Now, here's something that I would think about if you are young in your investments, I guess you can say path. Basically, whatever the time period that you'd like things to happen. So maybe you're thinking, oh, man, I'd like this to happen in 2 or 3 years. Literally triple it and let that be your base case. So if you want something to happen in 2 years, say, you know what? Let me change that expectation and give it 6 and let that be your base case and then start. What you'll find is you'll be able to think clear. This is a framework that now you're not in a rush, but then 6 years, if you really look at it in the grand scheme of things, is really not a long time. And especially in crypto, that amazing things can happen during that time. But you might fudge yourself out by only just wanting to do things on a 2-year time scale. So, for example, people have been having crypto for 2 years. Guess what? They've actually bought the top from 2021 and they've still been invested for 2 years. So you need longevity. Think 4, 5, 6, 10, like I said earlier. This is just framework, right? To prep yourself for investing. Think about safety, the less predictable income that you have. Let's say you have a job that, you don't have a static income. You may think, hey, you have less predictability on your end because you have to protect home first, right? You got to protect your butt. So you need to think about, hey, I don't want to necessarily overinvest at the point to where, hey, I don't have food on my table. That's foolish, right? And then so you need to say, okay, well, what is my predictable income? Can I carve a percentage of that for monthly investing, weekly investing, whatever it may be? And so that's something that you can come up with more detail at a later point. This is just framework. And then so because you need to think about, hey, safety for yourself. Create a system for everything. Number 5. So this is something that I found to be extremely helpful as a professional. Basically having a system for majority of things. You know how to have for everything, but for majority of things that are important to you is really key. The structure is important. So for example, do you have a system for paying your bills? Do you have auto pay, or are you just winging it? Just like, oh man, oh snap, I forgot about this, but I forgot about that. Are you taking accountability for the things that you have to take care of, right? Or do you have a system for your saving? Do you have a system for your investing, right? But then the key thing is, do you have a system for your learning? I have a way that I like to learn. It involves me being in a dark room that's very quiet, no other distractions, and I need that time, right? I need my laptop, I need my phone in case I need to make a call or two, whatever the case is. And I need that time. It doesn't have to be 5 hours, but hey, for example, what you may do is, okay, let's say you have a busy life, you got a job, let's say you got kids, whatever it may be, you don't have a lot of excess time. There's 24 hours. You can set aside 1 hour every other day. Let's just say, just in general, let's just say go for 2 weeks. And so what does that give you? That actually gives you 7 days or 7 quality hours of good intentional learning. I don't think that we're intentional about learning anything anymore because it's just general. It's like, hey, if it's not something I can get within 5 or 10 minutes, you can hear it, but did you retain it? And investing is all about, hey, am I retaining, and not even investing, but just in general, if you want to excel at whatever it may be in your life, are you retaining from things that you learned, maybe mistakes or just experience, and trying to cultivate them to apply them in a positive way in the future? So retaining what you're getting is key. Number 6, learn your habits. So what are your habits in regards to money? What are your habits? Do you feel like you're getting greedy as prices are going up? Like, do you have like your cutoff? I always talk about, like, I have a strong cutoff where I am no longer investing in crypto if X, Y, and Z starts to happen, right? Because risk premium goes higher than what I deem to be, helpful for me. Do you feel like as you see green candles, you want to start investing more capital? This is something that a lot of people fell into last cycle, for example, where because it was that dip. We had the April, May, high, 59, 60K. Then we have that summer lull, and then we start to go back up. And then so that second time, people are throwing 3 times, 10 times more money than they did when prices were lower, as prices are going up. So they needed that confirmation that's like, oh no, this thing is still alive at a higher risk point. That's a dangerous place to be. And so if you felt that, how do you get out of that habit and not do that again? Or maybe you've never done that. Maybe this is your first time around. Well, just check yourself. Whenever you see green candles, do you get extremely happy and you start reaching for your wallet? Because it needs to be the opposite. Whenever you see red candles, right, for something that you deem to be a quality asset, do you start reaching for your wallet? That's what it should be. So learn your habits and try to correct it towards the right habits or the more conducive habits to being successful as an investor. Number 7, you need to filter out 98% of people because most people do not have experience or know what they are talking about. Most people that are on Twitter, most people that are on Instagram, most people that are on, per se, how do you say, even YouTube, these are people that generally, from what I've been able to see and look at, these are people that maybe been investing maybe for like 3 or 4 years at best. Majority, you do get some people that are like, okay, I've been doing this 5, 6, 7 years. All right, cool. Perfect. Do they have experience in just crypto? That's something to think about. Or is it in other aspects of dealing with money? Because crypto is something you trade your money for it. So it is a money game. And then so what is their other relationships to money? Which they're not revealing that stuff. And you can't go verify it either. One thing about me, why I was like, I don't mind sharing some of my experience about being a professional athlete. Because guess what? People can actually go Google the type of, finance that I've actually touched, at least, right? And seeing, okay, well, hey, this person at least has had money before. So there's a thing. So that gives you that experience. There's no way to verify anything for a lot of these people. They can talk the talk, but are they walking the walk? And from what I can see from their actions, definitely not walking the walk, you know? And so it's all about having a good framework, good habits, real expectations, not being greedy, being steadfast. These are all qualities that you get when you have longevity in whatever you're doing. So these are things that you need to filter out all the people that you listen to, myself included, right? And now we'll go on to number 8. So use data as your guide, not someone's I feel statement. I feel is a dangerous place to be because you can feel something that is not linked to reality. And it's just your personal anecdotal viewpoint of what's going on. I feel that the market can go up tomorrow because XYZ, but no one can predict the future, right? It's just a probability, but your feeling is not so relevant towards, hey, what was the money transfer that actually happened after you felt it? And what I would encourage for people that say, hey, if you find yourself in that I feel statement, what you can do is add to that. So that's fine. You can feel whatever you'd like to feel, but hedge for multiple scenarios. So right here, hedge for multiple scenarios that's different than your I feel statement. So hedging is a concept of saying, hey, if it doesn't go the way that I think, what is my A or B that I am willing to do or that I will do? So having that in place beforehand is important. Number 9, so these are areas the longer that you start investing with your framework that you're going to have to slightly start to shift is now, let's say you've done decent, right? So now think about potentially diversifying the more money that you have to manage. I think concentration in the growth phase of your life is really important. But once you've kind of got more to protect, like I said, thinking about ways of protection is an important thing to protect yourself from certain taxes, right? To protect yourself from other risks that you are not aware of. Protect yourself from yourself. We tend to, the more that we make, like I said, lifestyle creep, the more that you make, the more that you're going to want to spend. So yeah, spending is okay, but is that in frame for longevity for you? And so we got to have those things outlined beforehand. Number 10, I think this is probably one of the more important ones, but time is your friend. Start early and often, but don't be in a rush, but be brisk with your pace. So I'll kind of extrapolate that. So time is your friend. The biggest asset that we all have is time. If we are afforded another day on this earth, thanks to God, thank you for this time. But with that being said, the sooner that you start something, the more experience that you can get. And so it doesn't have to be these big leaps and bounds with a whole lot of money. It may just be like, hey, $10, $20. Let me try this. It may not all have to be within crypto, right? $100 here, like whatever it may be. But being able to say, okay, let me spend my time going into this investment framework with my options. Let me identify the one that seems to be the best for me. And then once you've identified, you've started, hopefully, you're early. And if you're not, hey, it's all good. You can start from today. Now just don't be in a rush, right? So don't be in a rush to get to the end destination. Because guess what? When you get to that end destination, there's going to be another end destination there. And when you get to that next one, there's going to be another one there. But if the focus is only on end destination, you'll miss what's necessary for the whole process. The process is what's going to get you to that destination. It's hard for most people. So you got to be the few that can do it. But so not being in a rush, but you want to be brisk. Like, you're not just sitting around and be like, I got a year or two to maybe start. I got 5 years to maybe worry about it later. No, you want a brisk pace towards gaining invaluable knowledge and experience. That's the key. And then once you feel like you have that, that's going to give you the confidence to start to act. And so that is, something that we all have to sacrifice time of whatever else we are doing, spend a little bit more in this category to start to cultivate these things. Can't see this bottom one, but the bottom one reads, basically, this the fact of the matter. Number 11, realize most things don't happen by accident or luck. Most, right? Depend on your experience, knowledge, and your grit to see it through. And with anything, you're going to have to see it through. Whatever you're passionate about, whatever you'd like to happen in life, most of it's not going to just fall in your lap. Now, there's some good situations that you may come across, but you're going to have to do well with that good situation, especially if you want it to continue. There's plenty of times where we fun with the ball, where no one is perfect. But with that being said, you want to say, hey, I'm willing to do what's necessary. So that means, hey, delaying a little bit of gratification, still enjoying my life, but having some type of plan for tomorrow, the next week, the next year, the next 5, the next 10 is something to think about versus only about worrying about today, you know? And so it takes a little bit of grit, and it takes, like I said, a little bit of knowledge, a little bit of experience, but anybody can see it through. It's just a matter of, will you be willing to do it? And so these are just some basic framework things that I kind of written down. If you guys want a copy of it, you can always hit me up. You can hit me up on Telegram. And like I said, we can talk, and we can kind of, if you say, hey, I need a little bit of help of framing out my base framework for investing. Hey, there's the link, And so, yeah, I think everybody has an opportunity with everything going on with Pulse and PulseX and Hex and eHex, and everybody's not really understanding. Like I said, if you learn the key terms of long-term holder, short-term holder, what are the options that they have, right? What are the traditional things that they like to do? Right? Asset management for people that have, let's say, 100 million Hex. It's a different thought process and different actions that they take versus someone that has a small bag of 10,000 Hex. And then so learning their framework can kind of help you see what they do to game the system sometimes. There's a lot of things that we can think about and talk about, but are you spending the time to go down that deep? Or are you just kind of doing the same things that new investors do and just kind of say, hey, I hope everything works out? And so it's really up to you. Results may vary with everything, but I'm hoping that everybody takes the time to, like I said, see it through and do what's necessary because none of it's going to happen by accident. And just identifying the right stuff half the time is the hardest part. And then just waiting, not doing anything is the other part that actually is one of the best things that you can do. And then so filter out all the stuff, filter out all of the things that don't matter so much, focus in on what you need to do, go execute, and then keep updating yourself on, okay, like, how am I doing? How am I doing? Check with some other experienced people. Hey, does this line up to, your process? Da, 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 da. My process not may be the exact same, but can I extrapolate something from your process that can help mine? These are things that are important to do. I'm constantly doing it. I've had different advisors in my life within real estate, within, just money management, within investing management, even within, crypto for some time. And I'm still always checking up with everybody because the biggest thing, you never want to burn a bridge either, right? Because everybody can add value to you if you can, be willing to intake it and learn. Everybody who is worth listening to, I'll say, But yeah, so that's a nice little stream, y'all. Hopefully y'all enjoyed that. Let me see what else we got. Okay, that's a boss checklist. Keep going. All right, bet. Appreciate it, man. Yeah, man. I mean, these are just things that I kind of had in my head this morning as I was kind of looking at some things and checking out some of the things going on within the ecosystem, and mainly just like price action. And I didn't even have to go on Twitter or YouTube to know what was going to be happening. And it verified itself. As soon as I seen price action for PulseX or Pulse going down 56% in the first month, same things are happening. And guess what? The same thing happened for other assets a gazillion times before. And so this is not anything new. It's only new to you if you're a new investor, but it's okay. Everybody will be good if you just do what you need to do. What else we got? Okay, cool. I had to dig and learn terms of thinking and percentage changed a lot for me. Yeah, man. Percentages are going to keep you sober within what you're doing. Let's see. Cool. What up, Swerve? Ready to buy this PLS under sack price? Yeah, man. Dynamic DCA is the name of the game. Accumulation before the time period that we're in is what you may want to think about. I'm thinking about that. I'm executing on that. Um, right? Because there's certain things that aren't hitting in the broader scheme. So like Bitcoin and Ethereum, which post chain and everything are going to ride the coattails of those two assets. And then so we need certain things to start to happen, right? Go and check the net unrealized profit and loss. Go check the NVRVZ score, right? See, are we still undervalued? Okay, what does the ramp up period look like in duration and scale? Right? All of these things. Look at the business cycle. Okay, what happens when we get to these later portions of holding interest rates at a certain percentage? Okay, at what interest rate does it take to get the average person to be willing to take more loans? Like, this is all data that you can go find out. And guess what? I mean, I could take some more time on the stream and do it, but at the end of the day, no one can just give you everything. So all of those statements I just made, guess what? You can actually hit up Google and start to do that research yourself to give you like I said, a broad base case for yourself to give you understanding. But yeah, man, it's like this is accumulation, easy accumulation. Same thing. You don't have to be greedy, but you can take your nibbles, and guess what? The lower the price goes, boom, the more that I'm willing to take a bite at that apple because the risk is lower. It's very simple. What up, Black Label Expat? Nice to see you, man. Hope everything is going well. I need those lists on my wall. It's very well thought out. Thanks. Yeah, man. Just hit me up. I could forward you whatever you need in regards to the list. Because I know I get hype on greens, but more hype when I see reds. Hey, the hype is a natural emotion, but hey, what do you do with the hype? Right? Is the big thing here, Um, but yeah, I think that's it, y'all. I'm gonna call it. I really appreciate y'all for taking the time to listen. If you're catching this on a replay, don't forget to hit the like. If you value any of this information, subscribe. I've got a decent body of work. So we did the first 50 first 50 episodes. We're going for the next 50 here within this year. And, it's going to be a very influential time on a lot of people's financial future if they can kind of keep pace with just some general things. Don't have to spend all day on this, but, just a little bit can go tremendous ways, so. That's it. Let's see. Anybody else? Any questions before we take off and we all go try to enjoy the rest of our life? Hey, appreciate you, Wade. As always, man. You've been consistent. It's the name of the game. Anything else? Well, if not, yeah, I'm gonna have to catch you on the next one. So I'll be trying to hopefully get a stream out to y'all sometime. What's today? So today is Wednesday, so probably sometime next week. But yeah, y'all keep digging, keep the grit, have your framework. And if y'all need me, if you need a consultation, yeah, take the time. Send me a message on Telegram and we can get a time and date that may work for both of us with our schedules. But yeah, that's it, y'all. Well, hopefully y'all get it together. If y'all stressing, what if you feel like you're cool, calm, and collected, then you're right where you need to be, man. And we keep on going. All right. Catch you on the next one. Peace.